Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 17th, 2025, and we're diving into Elevance Health's latest earnings report for the second quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Elevance Health has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Elevance Health reported an operating revenue of $49.4 billion for Q2 2025, which is a 14.3% increase from the same quarter last year. John, what are the key drivers behind this growth?
The growth in operating revenue is primarily driven by higher premium yields in their health benefits segment, recent acquisitions, and an increase in Medicare Advantage membership. However, this was partially offset by a decline in Medicaid membership.
And how did they perform in terms of profitability?
They reported an adjusted EPS of $8.84, which is below the forecasted $9.20 by 18 analysts. This shortfall is largely due to elevated medical cost trends in ACA and slower rate alignment in Medicaid.
Operational efficiencies and future outlook. Despite the challenges, Elevance Health has shown some operational efficiencies. Can you elaborate on their operating margin and cash flow situation?
Sure, the operating margin for the quarter was 4.9%, down from 6.4% last year, reflecting the higher medical costs. However, their operating cash flow was strong at $3.1 billion year-to-date, indicating solid cash generation capabilities.
They've also revised their EPS guidance for the full year. What does this mean for investors?
They've adjusted their full-year EPS guidance to approximately $30, reflecting the ongoing challenges in the healthcare environment. Despite this, they returned $2 billion to shareholders, showcasing their commitment to shareholder value.
Segment performance and strategic initiatives. Let's delve into the performance of their segments. How did the Health Benefits and Carelon segments fare this quarter?
The Health Benefits segment reported $41.6 billion in revenue, up 12% year-over-year, driven by higher premiums and Medicare Advantage growth. However, they faced challenges with a 3.3% decline in Medicaid membership.
And what about Carelon?
Carelon saw a significant 36% increase in revenue to $18.1 billion, thanks to recent acquisitions in home health and pharmacy services and growth in Carelon RX product revenue.
CEO insights and strategic focus. CEO Gail K. Boudreaux provided some insights into their strategic focus. What are the key takeaways from her statements?
Gail emphasized their commitment to enhancing efficiency across the healthcare system and focusing on value-based care delivery. Despite the challenges of elevated medical costs, they are confident in achieving a 12% average annual growth in adjusted EPS over time.
How are they planning to tackle the current challenges?
They are focusing on managing healthcare costs, deploying targeted investments in advanced technology, and reinforcing their operational foundation to support long-term value creation.
Key takeaways. In summary, Elevance Health has shown strong revenue growth but faced challenges with profitability due to elevated medical costs. Their strategic focus on efficiency and value-based care is promising for long-term growth. John, any final thoughts?
Elevance Health is navigating a complex environment, but their strategic initiatives and strong cash flow position them well for future growth. Investors should keep an eye on their ability to manage costs and execute their strategy effectively.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Elevance Health's performance in the comments below.